Inflation fears, interest rate anxiety, and geopolitical shocks. How macro forces are shaping the cryptocurrency market. From central bank decisions to international tensions and inflation fears, we'll unpack how macro forces are influencing Bitcoin, Ethereum, and the altcoin space. Let's start with the latest economic data from the US and Europe. This week US, April inflation data came in hotter than expected, with the CPI rising 3.6% year over year, slightly above the Federal Reserve's 2% target. Meanwhile, core inflation, which excludes food and energy, also remains sticky. The Federal Reserve has responded with continued hawkish signals, suggesting rate cuts may be delayed until Q3 or Q4 much later than markets had hoped. Why does this matter for crypto? Higher interest rates generally lead to lower appetite for risk assets, including cryptocurrencies. Tight monetary policy reduces the flow of capital into speculative markets. However, investors are also turning to Bitcoin as a hedge against long-term inflation, which has supported its recent surge. Interestingly, despite these concerns, Bitcoin has held above $67,000, showing resilience in the face of tighter financial conditions. In Europe, the ECB European Central Bank took a slightly different tone. Some board members suggested a possible rate cut in June, citing slowing growth across the Eurozone. This divergence between the Fed and ECB is creating volatility in the forex and crypto markets, particularly in stablecoins pegged to fiat currencies. Now let's turn to the global political stage. One of the biggest stories this week has been the intensifying tensions in the Middle East, with renewed conflict between Israel and Iran-backed proxies in Syria and Lebanon. Reports of potential escalation have impacted oil prices and in turn, caused uncertainty across financial markets. In response, crypto saw a familiar trend. Bitcoin and gold both spiked as investors sought safe havens. Altcoins dipped, showing their sensitivity to global risk sentiment. Over in Asia, China's economy showed signs of weakening, with lower than expected industrial output and consumer demand. This has prompted speculation that the People's Bank of China may introduce stimulus in the coming weeks, a move that could indirectly benefit global risk markets, including crypto. Also notable, Russia continues to explore blockchain-based settlement alternatives as sanctions persist. While still early, this may indicate a longer-term shift away from SWIFT and toward decentralized financial tools. The macro story isn't complete without talking about regulation and institutional sentiment. This week in the U.S., SEC Chair Gary Gensler once again dodged clear answers on the classification of Ethereum during a congressional hearing. While he confirmed that Bitcoin is a commodity, Ethereum remains in limbo, creating frustration among U.S.-based crypto businesses. Meanwhile, Hong Kong has approved several Ethereum and Bitcoin ETFs, and BlackRock's Spot ETH ETF is awaiting a decision. These developments outside the U.S. are shaping global crypto flows. ETF adoption is proving to be a key gateway for institutional money. Regulatory clarity or lack thereof is influencing where innovation and capital go. In short, crypto is becoming increasingly intertwined with international finance, and these structural changes are accelerating. How are investors responding to all of this? We're seeing a split mentality. Institutional investors are continuing to buy into the long-term thesis of Bitcoin, especially as a hedge against inflation, currency devaluation, and systemic risk. Retail investors, however, appear more cautious, especially in altcoins. Many are waiting for confirmation signals or clear macro stability before re-entering with full conviction. One key trend to watch, stablecoin inflows. On-chain data shows that Tether USDT and USDC reserves on exchanges are rising, often a precursor to increased buying activity. This suggests that many traders are sitting on the sidelines, ready to deploy capital when the macro dust settles. So, what can we expect going forward? If inflation cools and rate cuts begin, crypto could see another leg up. If geopolitical tensions escalate, Bitcoin may benefit as a hedge, but altcoins could suffer from volatility. Regulatory clarity will remain a wild card, especially in the US, while Asia and Europe move ahead. Crypto is no longer isolated from the rest of the world. It is deeply woven into the fabric of global economics and politics. Whether it's interest rate policy, war, trade disputes, or currency shifts, digital assets are now reacting just like any major financial asset class. From inflation worries to geopolitical shocks and institutional pivots, the crypto market continues to evolve.